Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, October 22nd, 2019. Feeling a little bit better today, as you can probably tell from my voice. I'm still a little nasally, still coming off the tail end of a cold or the flu, whatever it was. But feeling better today. I want to get a video out there to you guys. Nothing really super important here, no big developments, but there are a few things I want to share, some things to keep an eye on. We'll start out with the QQQ. Now keep in mind, we have Microsoft reporting tomorrow after the market closes, and then on Thursday after the close, Amazon and Intel. So you have some of the top components of the QQQ and the SPY, the S&P 500 and NASDAQ 100. So you have the potential there on both Thursday morning after Microsoft reports, as well as Friday morning after the Amazon and Intel report, for a gap in either direction. So as I go over this analysis on QQQ, keep in mind you could get a whipsaw signal. For example, as I've mentioned this morning in the update, we've been trading now for a little while, which is to be expected, in the bottom of the trading range. Remember, we highlighted this trading range for the past week or so here. And we trade either on top of the range, this is one draw of it, in these clusters here, and then you break below and you trade on the bottom of the range. It's that simple. The midpoint acts as support and resistance and has done a great job so far. So that was our last sell signal when we broke to the bottom with the logical target. I'm sorry, when we broke the midpoint of the range with the logical target being the bottom of the range, and since then we've been drifting higher. Now we're at the bottom of the range again. We're also getting a little bit long in the tooth. You can see these the amount of time that we've traded within the range from above or below, it's comparable right now to the shorter on these two periods here. So in other words, you don't trade here forever. You're usually going to go up or down. And look, now we could pop above, we could have a little whipsaw signal, but so far the MO has been pretty clear. This line has acted as support and resistance on numerous occasions, as has this uptrend line here. Let me go to another board here, look a little more clean. So there's the channels. So pretty much when you break down below a channel, that would be a sell signal right there. Now that could happen at any point in time, but again, you'd have to take it with a grain of salt. Unless you're an active trader, a quick trader, you have time to get out before tomorrow night. Unless you're a gambler, Microsoft reports can go either way. Same thing with Amazon or Intel. So bottom line is the markets, and they tend to hold up as well before you get a slew. It's not just one. Again, it's this week and then next week you'll have all the top 5, 6, 7 components of the NASDAQ 100 reporting. Apple's next week with a couple others. And so the markets tend to go sort of in a holding pattern before that happens. So really don't expect a whole lot out of there. If you're a swing trader, you're probably not going to see much if we broke down before then. Or if we happen to go higher, you're probably not going to go much higher. So markets are really pressing. There's still a lot of overhead resistance. You can see a lot of reactions here in QQQ. It's been failing here around the 194-ish, 195-ish level for quite a while now. When this goes back, you can see all the way into August here, and we were a little bit above it. So we're not too far from new highs. And again, this thing could break out, go that way, and we could make that marginal new high. We still haven't made a new high yet in QQQ, not in a while. And I still think the upside is limited based on the posture of the daily and weekly charts, but we'll see. So at the end of the day, like I said, you might have some short-term trading ops, and let me flip over to that chart of NQ I shared this morning. If you got this morning's update, we have, as I showed you, what did I say, 9 reasons why I think the NASDAQ was going to drop today, even though we're up in the morning, and that did play out. And right now the QQQ is down about 0.2%, and I listed the 9 reasons as 1, 2, 3, 4, really more than that, whatever you want to call it. Around here, 79, 80. It has been resistance, and that goes back again for quite a while here, where the NASDAQ 100 has not been able to punch through there. Now, it is certainly pushing up against there, and I would probably give it coin toss odds whether we're going to break above it. And if we do, that would be near-term bullish. And a solid break, not just a little pop. You want to see a solid break on volume. Maybe we'll gap above there. The futures might not gap, but QQQ could gap above that comparable level. Remember, the futures, they shut down for squaring away positions, after the market closes each day, but for the most part they're trading 24/7. So you have resistance, and then as I mentioned before, and I've covered this in the past, every security I treat differently. If you use a standard RSI 14 setting on your chart, then you're going to have most charts will give you lines at the 70 level and the 30 level, 70 being overbought, 30 being oversold. But as you can see here on NQ, the Nasdaq 100 futures, it's really not worthwhile to you're not getting a lot of useful value when you hit that 70 level. There were some shorting ops there, but a lot of times you can see that we hit 70 and we kept going. We kept going here, here, and you get above it. So I like to put that line where I see the most number of reactions, and on NQ, at least in recent months, and that may change, going forward, it's been about that 85 level. And as I showed you this morning, without exception, here we hit it. We went a little bit higher, but we're talking, probably less than 1%, and then put in that divergent high, and we had a correction. So one there, one there, one there, and again, I put that chart out this morning. So that put the odds in favor of a pullback, or at least minimal upside when you get this overbought in the near term. So it was good for at least a day trading shorting op. And then you had an additional sell signal come today on the break of this minor trend line here. So that's that. And that also, because of this overbought reading, and as I showed you on the post earlier today, the shallowest drop, the lowest pullback that we've had since we've hit that level there has been this one right here, about that. So most of the drops when you hit that extreme overbought reading have been quite a bit more. So therefore, this could be the catalyst, and I think it probably will, to break that QQQ channel. So I wouldn't be surprised to see that break today and or tomorrow. But again, how far it goes, it could go a lot farther. Believe me, if Microsoft, the market doesn't like what Microsoft does, it could go a lot farther. But let me flip back to that chart. So what you want to watch for, at least for a near-term sell signal, and if you want to be a purist, sometimes I do find it better to be a purist and just take the charts, whatever they're saying, bullish or bearish, despite what news or what you think might happen. Take a sell signal on face value. So you could certainly do that and just control it with your stops. But again, I just have to reiterate that when you go long or short just in front of big market moving earnings, even if you're not in one of those individual stocks, they are the top components of the S&P 500 and the Nasdaq. So if they blow it away and there's a big gap up, they're going to drag the indexes up, and that's going to lift. A rising tide tends to lift all ships because they're indexed, and vice versa. It can go the other way. But what you want to watch for is you have a comparable price channel on SPY right here. You can play around with the trend line. I can bring it in tight like that. That's probably the best fit. I have the midpoint line, as I told you. Sometimes it's not exactly in the middle of the channel. This one kind of looks like this. If you see it right here, it's not even. Here's the trend line in the channel. Let me see if I have it on another board here. No, I don't. Let's just work off this one. But either way, here's your uptrend line. So you want to see SPY and QQQ both break down, and that might give you a sell signal. We're still within spitting distance of the all-time highs, so it would be unusual, but not unseen, to have the markets get this close and not make that pop to new highs. Again, that has been the MO, the modus operandi for over a year now, where you go on, the market's made a marginal new high, anywhere from less than 1% to no more than usually 2-3% above the previous high, followed by a big correction. Some corrections bigger than others, but that's what it's been doing. This high was slightly above that one, as this one was above that one. This high was slightly above that one. Correction. Sometimes you take out the highs and you trade for a few weeks before correcting, and sometimes it's right away, like this one here and this one. They came right after the break of the previous highs. So again, it's very hard to gauge a near-term direction, and but the one thing that I've been consistent on, and I may be wrong, but I still think the upside is limited at this point in time because of everything, again, on the charts. But we'll see. Let's get these stocks out of the way. If they blow it away and they take out new highs in these divergence lines, I'll have to move them up if that's so. And if I have to move them, where does it start to Where did I start to become concerned that these divergences might be burned through or negated, meaning, not play out? Well, it would be first off over the, we have a previous reaction high here in the PPO, then this previous one here, of course, and then right here. So right now, this is our divergence line. It's really one and the same. The the SPY or S&P 500 right here is making a series of lower highs in the indicators, both the RSI down here below and the PPO, versus higher highs in price. That is negative divergence. And so any marginal new high now followed by a reversal would just be an extension of this divergence, and that's big divergence. Bigger the divergence, usually the bigger the drop. However, if we start to move up, we take out first that previous high, well, we could still move the line up because we have this one here and this one. But after that, it wouldn't take a lot to burn through the divergence. So we'll have to stay flexible, wait and see what happens. We're still back testing on the weekly charts. I've covered that quite a bit. There's probably not going to be any change this week. Or there could be by the end of the week. Again, by Friday, we're going to have not all of the FANGs, but a good part of them out of the way for earnings. So we'll see. Of course, the market's probably going to wait and see what Apple does, but maybe not. It depends. Let's see how it reacts to Microsoft and Amazon, and we'll look at those real quick. Quite often, if I look at a stock heading into earnings, if the chart is clearly bullish or clearly bearish, I can say with a pretty good degree of confidence, there's never 100%, but a good degree of confidence, what the stock is going to do after that, because I'm a firm believer that the technicals have priced in the fundamentals and what's going to happen. In this case, Microsoft, we continue to diverge like the broad market, and if I had to guess, I'm going to say to the downside because of that, because we have we have a stock clearly in an uptrend. Make no mistakes, clearly a bullish uptrend. This stock is not far off all-time highs, but yet a bearish technical posture. We don't have any sell signals right now. Well, kind of, a little bit, not super well defined. We had this yellow uptrend line broken down and back tested here. I'll zoom in. The yellow trend line off the December 24th lows, breakdown, back test, rolling over. So if I had to guess, and I wouldn't lay a bet, it's not worth it. That's gambling. I'll wait till earnings out of the way. I would say that this one goes down. On that, one more thing I want to say, and this is very important. I say this all the time, whether it's an FOMC announcement or an earnings for a stock. Don't put too much into the initial reaction. These companies, for example, Microsoft reports after the closing bell. First thing that happens is they report earnings. All those numbers come out, earnings per share, everything else, and then you're going to see a reaction on the stock. A positive or negative reaction, you may see it whip up one way, down the other. But what I'm getting at is the initial reaction quite often is not the lasting reaction. It's not the one that sticks. Sometimes it is, but quite often it's not. After the initial report, they release that, and then the humans plus the computers, the algos, they process. Algos, the computers rip through that report faster than a human can read it, and they're firing off buy and sell signals with these algorithmic trading programs. People are buying and selling. But then comes a conference call, and that's probably more important because Microsoft is then going to, I believe this company gives guidance a lot, to give guidance, tell you how things look going forward. So the market doesn't care about, they care most about what's going to happen going forward. Companies reporting quarterly earnings, that data is old. By the time the quarter's long since over, several weeks beyond us, and that's the last 3 months from the point the quarter ended. It covered 3 months leading up to that. So with that being said, you let the dust settle. Microsoft, you'll have a good idea which way it's going to head after it's traded all day on Thursday. So what I'm trying to get at is don't overreact to what happens in the after-hour session tomorrow night. Let's see how the stock opens and trades on Thursday. And then ditto for Amazon and Intel. They're going to report Thursday night, and then you'll see what they do on Friday. Amazon, so that's where I think Microsoft heads. AMZN, Amazon, as I mentioned recently, one of the better looking, at least in a bullish technical posture, kind of cross currents, if you will. But what stands out to me, I know you're seeing a gazillion lines here on this chart. Let me just highlight the ones that stand out. You have a downtrend line here. Now I'm going to say it's a questionable downtrend line. I have a few reactions there, but not a lot, and the breakout since has not been impulsive. More importantly would be this divergence line here. You have positive divergence, and that is normally where I can tell you, if we are still in a bull market with a lot of room to run, this stock I think will outperform the majority of the other FANG stocks, and will outperform QQQ. These divergent lows and divergence highs are where I look to go long and short for the major trends. I like that on the 60-minute charts for swing trades, and I like it even better more for trend trades on the daily time frames. However, if this market is topped, and there's you can sit here and debate it all day long. You're going to say, well, no, Randy, we're right off the highs, and QQQ is not high. Again, as I said, the market has gone virtually the broad market, the S&P 500, the Dow. Those are the more representative of the whole economy, whole stock market, not the tech-heavy Nasdaq 100. They've gone nowhere now for nearly 2 years. They're slightly above the highs, and so while you can't say they're in a downtrend or an uptrend, it's really more of a sideways trend. So my point being is, if this is just one big topping process, then what is possible, it is possible, I should say, that these divergences may not pan out, and that is indicative of bear market action. So if they don't, this is all I'm trying to say, if they don't pan out, if these divergences are burned through, now they could certainly extend. We could take another leg down to Amazon, extend the divergences as long as we're making a series of higher lows. But if they get taken out with these indicators moving down and Amazon moving down, to me, that's quite bearish. That is something you tend to see more in a bear market versus a bull market. Positive divergence on the daily time frame being negated or not playing out for the next major leg up. So that's something I'm watching right now, and we'll see how it goes. Like I said, but this. You have that technical, the bullish divergence there, but you also have, can play devil's advocate. I don't want to spend too much time on any one stock. I like to use this PPO as the 9 EMA, the signal line, as a trend indicator. It's not perfect. Here was a little whipsaw signal, but other than that, it does a pretty darn good job of telling you if that white line, the signal line, is above the zero line, you are in a bullish trend, be long. When it crosses below, you are in a bearish trend, be short or get out of the stock. And it's done that was a big correction. That was a big drop there. It was also forecasted. I had this trend line here, break and a back test, and predict that was my third target hit before we even broke down. The divergence high, everything aligned with that. And then once we had the bearish cross, it put us on a sell signal, and that ended with, you got it, there it is, your positive divergence. So that's my third target was hit, and that's where a bounce looked likely, because you had positive divergence. The target was reached that was identified before the stock even topped, and then we went up here and we put in a divergent high at the last high, and we've been moving lower since. And again, that PPO trend indicator went on a sell signal right here when that signal line crossed over. And the zero line, once you're below or above, it acts as support or resistance quite often. So you tried to back test it there, you failed. We're not far from it now. So this is kind of an important level. So I think I can't wait to see really what Amazon does. Maybe not the day after, but heading into the next week or two. Does it come on up here? Do we regain that zero line? Do these divergences start to play out? If so, that's certainly near term and quite possibly intermediate and longer term bullish. You still have these double top high to contend with here, so it's not like it's all smooth sailing, at least up to that point. However, should we go down, that's what I'll be watching for. Does it keep this trend indicator on a sell signal? Do we burn through those divergences? Do we take out this 616 support? And if so, then I'll turn my focus back to the weekly chart, which to me, here's a stock, I've covered this in the past, it's already broken down, already given me a long-term sell signal back here. Broke down on the weekly chart, and it's been back testing, and it's below that trend line. I'm talking about this trend line here off the 2015 lows. So we'll see. We'll watch. This is one of many I'll watch. And here's that same PPO trend indicator. It works on various time frames, and you can see right here there's work to be done. That's why I can't say with the highest degree of confidence just because we broke this trend line and we're back testing it from below, because you can see the only other time we were below right here, this whole trend, it got you out, and that was a big drop back there in Amazon. It was a downtrend for quite a while. We had crossed over there, and it was certainly bearish at that point. The biggest drop that we had, 36% correction off the highs. And right now we're testing it from above. So that trend indicator is still bullish. Again, I use a white line because that's the last of the two to cross. If you use a blue line, PPO line, you're going to get more whipsaw signals. That's why I like to use a white line. So Amazon, to me, is in a kind of a make or break technical posture from everything I just covered. So this is one, and it's certainly a market leading stock that I'll be watching over the next week or so here. And a quick update on the small caps. You had, well, actually, technically speaking, that's where your divergent low was. But this was about an equal low. So you know what I'm going to say? Yeah, that was close enough. If it wasn't exactly equal, it was very close. So you could say the divergence extended to that point. So here's another instance here where you have the small caps in a, you don't want to call it a bear market. Yes, they dropped well over 20%. What was that drop off the highs? It was about almost 30, 20, high 20s. But again, the term I use for the bull market off the 2009 lows is supersized. Everything was supersized. The magnitude, the duration of the bull market, and therefore the corrections within that bull market for both stocks and sectors. So 26, 7, 8% certainly meets the technical definition of a bear market, which is a drop of 20% or more. But when you look at the bigger picture, really, it's you're still above the long-term bull market uptrend line. However, like everything else, small caps have really been sucking wind. They topped all the way back in mid 2018 right there, or early fall of 2018, and here's a downtrend line that may come into play. It's not the best to find, but it's one to watch. And you had the divergent low there. 60-minute chart. We may have a sell signal soon. If we have comparable to the price channel on QQQ and SPY. You don't have a price channel here, but you have a rising wedge pattern on the 60-minute chart of IWM, and it's confirmed with negative divergence. That makes that a bearish rising wedge pattern. So we need a break below this trend line, and I think it's likely, highly likely. That's a nice clean wedge. So you want to see, ideally, you want to see SPY and QQQ also break down their respective trend lines on the 60-minute chart. And then targets, well, you have a gap right here. I don't have that marked, but you have to take out this support level, of course, and I think that would happen. You have a gap here to be backfilled, and I think that's minimum target right there. And then you can see some of the other support levels below. So these are the levels to watch for the next week or so. And like I said, trading, it's going to be, there's a chance that if you get these sell signals and if they happen before Friday, that the market could go the other way, depending on how earnings go. So the key is keep it light. If you want to take those trades, if you get the sell signals, or if you already shorted today, the NQ, like I said, the odds for a pullback are pretty good because of that those overbought conditions. Nasdaq 100 at resistance, QQQ right around there, and if you're in that short, just you got in today near the highs, just set a stop not too far above, and you can let it ride for now because I suspect those channels are going to break. I'm talking again about the 60-minute channels on QQQ and SPY. All right, let's wrap it up here. I was originally planning to do an all-inclusive video, but that's too much. I digressed a little bit talking about those stocks, the Amazon and some of the others. And let's keep this limited to the stock markets, and then I'll do another follow-up and talk on the things I've been watching lately, like treasury bonds, gold. Gold's still consolidating. I'm not posting a lot of updates, but I'm watching it very closely. Crude oil starting to move. Energy stocks are looking interesting. Some work to be done. I made some comments in the trading room on that. Bitcoin, cannabis stocks, coffee. I'll try to hit on all those in the follow-up video here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.